Is the bull market ending in 2 months or just getting started? Analysts are all over the place. CryptoRover is ready to cash out his massive profit, betting on a peak in just 60 days. Meanwhile, experts like Ben Cowen are looking at historical charts that point to a classic September dip before the real fireworks. But what if they're all wrong? Charles Hoskinson is building a digital nation on Cardano to capture Bitcoin DeFi, and Lark Davis points to Donald Trump's full-throated support as a sign that this cycle is unlike any other. With banks and corporations quietly stacking coins, are you prepared for what comes next, or will you be caught off guard by the final move? In the latest video from Altcoin Daily, Charles Hoskinson sits down for a chat about Cardano's next moves. He's really focused on two main areas, Bitcoin DeFi and a new project called Midnight. The big idea for Bitcoin DeFi is to let Bitcoin holders get a yield on their assets without ever having to sell their Bitcoin. Hoskinson believes this market could eventually be bigger than Ethereum and Solana combined. He also thinks Bitcoin itself could hit $250,000 this cycle, which he sees ending around 2026, simply because there isn't enough Bitcoin to go around with all the new institutional demand. For Cardano, he sees it growing into a digital nation with a population that could rival Bitcoin's. He points to the on-chain treasury, which currently holds 1.8 billion ADA, over $1 billion, as a tool to fuel this growth. He also talks about Midnight, a partner chain designed for privacy that could bring real-world applications like medical records and regulated finance into the crypto space. Hoskinson also got candid about what worries him, admitting they didn't take meme coins that seriously and missed the wave that helped Solana recover, which he sees as a failure of imagination. It's interesting to hear Charles lay out such an ambitious path for Cardano, especially the focus on becoming the hub for Bitcoin DeFi. This strategy feels like a direct attempt to tap into Bitcoin's massive liquidity and user base, which is a smart play. The vision of a digital nation isn't new for him, but connecting it to the newly activated billion-dollar treasury and the upcoming Chang hard fork gives it more weight. This fork is supposed to hand over governance to the community, which is a huge step toward that vision. However, Cardano's reputation for slow, methodical development could be a double-edged sword. While it creates a secure foundation, the crypto world moves incredibly fast. Competing with nimbler ecosystems for the Bitcoin DeFi narrative will be a major test. His honesty about missing the meme coin trend on Solana shows a level of self-awareness, but it also points to a potential blind spot in a market that's often driven by trends and hype, not just technical perfection. In the latest video from the CryptoRover channel, the host shares that his Bitcoin long position is doing incredibly well, now showing a profit of over $370,000. He explains that he doubled down on his position during the recent price crash, confident that Bitcoin follows liquidity, which is exactly what happened. He points out that Bitcoin has broken a major downtrend and is now beginning its next big move up. His price target for this breakout is a whopping $130,000. At that point, he plans to completely exit his trade, which would net him a profit of around $800,000. He believes this bull market only has about 2 months left, and this is the period when the most money is typically made. It's interesting to see such strong conviction in these high-priced targets. While his technical analysis points towards a big rally, the broader market sentiment feels a bit more cautious right now. For instance, spot Bitcoin ETFs have experienced some pretty big outflows lately, showing some institutional hesitation. Plus, the upcoming Mt. Gox creditor repayments could introduce new selling pressure into the market. His idea that Ethereum will hit $5,000 to $6,000 is also bold. The approval of spot ETH ETFs is a positive step, but it's not a sure thing that their launch will immediately send prices soaring. There's just as much talk about it being a sell the news event. His 2-month timeline is very precise for a market that can turn on a dime, so it'll be fascinating to see if his confident predictions play out against these uncertain market conditions. In the latest video from the Crypto Tips channel, the host argues that he's more certain than ever that we're in an alt season and approaching the final phase of the bull market. He starts by pointing out how the U.S. money supply has ballooned to over $37 trillion, suggesting this currency devaluation is a huge reason to own assets like Bitcoin. The main focus, however, is on identifying signs that the market is nearing a peak. He points to several top signals, such as Arthur Hayes, the founder of Bitfinex, FOMO buying $10.5 million in ETH after previously selling, and Ethereum's co-founder Joseph Lubin predicting ETH will surpass Bitcoin's market cap. He also dismisses exaggerated claims, like a Cointelegraph article suggesting blockchain can solve world hunger, as typical bull market hype. The speaker strongly disagrees with the growing narrative, reported by outlets like CNBC, that the traditional 4-year Bitcoin cycle is over and we're entering a multi-year bull market. He calls this dangerous talk that often appears right before a major downturn and warns that most people will lose money by believing it. He advises viewers to think for themselves, ignore so-called experts like the Harvard economist who wrongly predicted Bitcoin's fall in 2018, and prepare to take profits for the coming bear market, which he believes will be a massive buying opportunity. The speaker makes a compelling case by pointing to classic signs of market euphoria that have historically signaled cycle tops. The "this time is different" narrative he criticizes is indeed a hallmark of late-stage bull runs. However, the current market has one major difference from previous cycles: the introduction of spot Bitcoin and Ethereum ETFs. This has opened the floodgates for a new wave of institutional capital that operates on different timelines than retail investors. While the retail-driven excitement and silly headlines feel very familiar, the sustained demand from these new financial products could potentially stretch the cycle or alter its peak. It creates a fascinating tug-of-war between old, reliable cycle patterns and powerful new market forces, making it incredibly difficult to call the exact top this time around. In the latest video from Lark Davis, he talks about the start of a major crypto move, pointing to Donald Trump's very public support for Bitcoin. Trump is all in, saying crypto will keep climbing under his administration. This sentiment is echoed by Morgan Stanley CIO, who believes the 3-year rolling recession is over and we're at the beginning of a fresh bull run. Corporate buying is also heating up, with public companies scooping up more Bitcoin than ETFs for the 3rd straight quarter. It's interesting to see how much the narrative has shifted this cycle. Crypto isn't just a retail-driven phenomenon anymore. It's a talking point in a U.S. presidential election and a serious asset for Wall Street firms. The backing from a figure like Trump, whether you agree with him or not, gives crypto a certain kind of mainstream validation it's never had before. At the same time, the institutional money flowing into Ethereum ETFs is very real and shows a fundamental change in how big money views the asset beyond just Bitcoin. While the price predictions like $30,000 for ETH sound wild, the underlying drivers are different this time. The market seems to be feeding off this blend of political legitimacy and institutional adoption. In the latest video from the Ben Cowen channel, he breaks down a recurring pattern for Bitcoin in years after a halving. He points out that Bitcoin is getting very close to its old all-time high of about $123,000. Looking back at 2013, 2017, and 2021, a clear trend emerges. Bitcoin's price went up in both July and August, followed by a slight drop in September and then another rally in October towards its cycle peak. Cowen thinks we might be seeing the same playbook unfold right now. It's my view that Ben Cowen's analysis, which is rooted in historical cycles, presents a very logical and disciplined take on the market. His focus on the post-halving year patterns has been a consistent theme and provides a clear roadmap for what might come next. However, the current market has a major new player that didn't exist in previous cycles: the U.S. spot Bitcoin ETFs. The constant and significant demand from these investment products could act as a powerful counterforce to historical trends. While a September correction is certainly possible, the sheer volume of institutional money now entering the space might soften the dip or shorten its duration compared to what we've seen in the past. It will be interesting to see if the old cyclical patterns can hold up against this new wave of capital. In the latest video from the Crypto's Rush channel, George shares his excitement about the crypto market, which is showing strong signs of life. He points out that Bitcoin has surged to around $119,000 and is getting close to breaking its previous high of $123,000. If it pushes past $120,000, he expects a new all-time high soon. At the same time, what he calls altcoin season has started, with altcoins holding their value even as Bitcoin rises. He mentions that ETH is trading near $4,300 and Solana is up around $190, with meme coins also starting to wake up. This week is very important due to upcoming inflation data, CPI, and PPI reports. George suggests that if these numbers come in low, the Fed might be convinced to cut interest rates by 50 basis points in September, which would be a huge boost for the market. He also touches on recent positive developments, like Harvard's $120 million purchase of a Bitcoin ETF, which adds to the overall positive feeling in the market. He thinks Solana is ready for a big recovery and that XRP is just consolidating before its own major move. George's take on the market feels pretty spot on with the general mood right now. Everyone seems to be holding their breath for this week's inflation numbers. It really feels like that data could be the trigger for the next big move one way or another. His point about institutional money is particularly interesting. News like Harvard's purchase isn't just a headline. It can change the psychology of the market. It suggests that big players are looking past the daily volatility and seeing long-term value, which is a powerful signal. The fact that altcoins are holding up while Bitcoin is climbing is also a strong sign of broad market health, not just a Bitcoin-driven pump. It feels less like a bubble and more like the start of a sustained rally, assuming the economic data plays out favorably. In the latest video from DataDash, Paul Sampson gives a market update from a fictional future date of August 11th, 2025, where Bitcoin is trading at a new all-time high of around $123,000. He believes Bitcoin is still on track to reach his major target of $130,000 to $140,000, which he expects could happen around September. He warns that a significant 30% correction might occur once it hits that zone. It's interesting to see the classic market cycle narrative play out so clearly in this analysis. The idea of capital flowing from Bitcoin to Ethereum and then down into altcoins is a long-standing theory in the crypto space. His price targets for Bitcoin and ETH seem to follow this logic, with Bitcoin leading the charge before a potential altcoin season really kicks off. The cup and handle pattern on the altcoin chart is a compelling visual, but as he points out himself, these widely recognized patterns can sometimes be tricky because so many people are watching them. One thing to consider is how institutional money, which is more present now than in past cycles, might affect these traditional rotations. It could either speed them up or change their nature entirely. In the latest video from The Modern Investor, the host talks about a major shift where companies and banks are snapping up crypto. It's a kind of digital accumulation that's happening quietly but quickly. First, he covers the surprising news that a biotech company, MEI Pharma, has made a $100 million investment into Litecoin for its corporate treasury. Often seen as the silver to Bitcoin's gold, and was historically a testnet for new Bitcoin features. The move is unusual because most companies have focused on Bitcoin or Ethereum. To add to the story, MEI Pharma is also bringing Litecoin's creator, Charlie Lee, onto its board. The speaker thinks this isn't just a random choice. He believes these companies have inside knowledge that something big is about to happen with Litecoin's price or utility, speculating it could one day hit $1,000, $5,000, or even $10,000. The video presents two interesting cases of crypto adoption. The story about MEI Pharma's $100 million investment in Litecoin, while a powerful example, appears to be a hypothetical scenario to make a point, as there are no public SEC filings confirming such a deal. Still, it does bring up a valid discussion. A move like that would be significant for a legacy coin like Litecoin, which often gets overshadowed. Its status as a commodity, much like Bitcoin, could make it an attractive and safer choice for corporations looking to diversify their crypto holdings away from assets that might face regulatory issues. On the other hand, the PNC Bank and Coinbase partnership is very real, though it was first announced a couple of years ago. It's a perfect example of the "if you can't beat them, join them" mentality that has taken over traditional finance. Banks now see that they can't ignore crypto, so they're partnering with established crypto firms to offer services. It's a strategic move to keep their customers within their ecosystem rather than losing them to crypto-native exchanges. In the latest video from the CryptoJeb channel, the host talks about Bitcoin's exciting but tricky situation. We're seeing a huge rally, with Bitcoin breaking a long-term resistance trend line, which could suggest a run to $230,000. However, there's a problem. A big CME futures gap was left behind between roughly $117,400 and $119,100. Since about 95% of these gaps eventually get filled, it's very likely Bitcoin will drop back to that $117,000 level before it can really take off. The advice for traders is to be very careful right now. It's not a great time to open a new long position because you could easily get squeezed between the all-time high resistance around $123,000 and the downward pull of the CME gap. He suggests it's smarter to wait for a clear breakout above the all-time high or for a dip to fill the gap before making a move. Looking at the bigger picture, we're in Q4 of the post-halving year, which historically is when things go wild before a bear market. He mentions a potential rally to $180,000 to $225,000, but strongly advises everyone to be ready to take profits and have cash ready for a possible downturn. The focus on the CME gap is a classic talking point in the crypto trading community. It's one of those things that feels like a rule, but it's more of a strong tendency. Markets can and do leave gaps open for months or even forever. My take is that these gaps are often more of a psychological marker. So many people watch them that they can become a self-fulfilling prophecy. The real tension discussed in the video is the fight between the clear bullish momentum and the traders waiting for that dip. The speaker's advice to be patient is spot on. The area just below an all-time high is often called a liquidation zone for a reason. Markets tend to make sharp, unexpected moves to shake out over-leveraged positions before a real trend emerges. The most solid piece of wisdom here isn't the price prediction, but the reminder to manage risk and protect your portfolio, because that's what separates successful participants from those who get wrecked.